Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level. So as mentioned in my previous video, since the market did took support around 89 days exponential moving average, we were expecting an up move, and the target that we were looking for was 2000, 10,000 to 30 kind of target we were expecting. But as you can see, the market did registered a good opening with a bullish crossover, and then we knew that the market should go high. However, the target was only 10,230, but market did got up very nicely and gave us a good support. And now what you can observe is the market is trading all above is Fibonacci exponential moving averages with a bullish crossover. So that is good sign for us. Now, how much market should go up? What are the technical indicators are suggesting? How the market participants have behaved today and how they are expecting this move to continue? All these things we are going to analyze in this video. So let us start with the option activity range. Now option activity range broadly is 10,700 to 10,000. Now generally I say that if I say the option activity range is like such and such, you should not expect that much of target. But here I can see that the 10,700 is a level where I can see that continuously a bullish position is getting formed. So I think till the expiry you can expect a target of 10,700, provided we did see a good sort of a bullish position getting formed continuously in spite of some sort of down moves, if at all they are likely to come, or the bullish position that has been created does not go away. So if the bullish position does not get got covered away, we can definitely expect a good sort of up move to continue till 10,700. So there is a good sort of upside left with the bullish crossover. We can definitely expect a high move. As you can see, the spot is already trading all above its exponential moving average. There is a bullish crossover. Now if you want to check whether the market is going to sustain on a high level or not, what you need is the red line now should cross this orange line, which is the 21 days exponential moving average. So if that happens, you can expect that there will be some sort of support that will be holding the market to go down further. Now let us check the technical indicators. I'll come and talk about the option data that the market participants have formed today in just a bit. As you can see, the market did took a support slightly below its previous support line. Just let me uh, s- squeeze the chart. And as you can see, there is a good support, and if you see, there is a good support here. Market did give us a good move, so we can definitely expect a good move here also. There is a bullish crossover getting formed, and as I said in my previous video, if there's a trend break and then there is a bullish crossover, you can definitely expect that the bullish crossover has a good sort of LT. Here you can see a bullish crossover. Moving average is also suggesting a bullish crossover. RSI is only thing that is not getting confirmed here, because RSI is not getting broken on its exponential average. So that is something that we need to wait for. So we have two bullish and one neutral sort of move that is getting formed. CCI is also now trading above its exponential level, so which is also suggesting a positive move. Volatility is already high because there is a good sort of up move getting formed. Now at worst case, what you can expect is volatility goes down. So if you have seen my previous video, I also mentioned that the decreasing volatility and uptrend goes very nicely, though there will be not sort of going to, there will not be strong up move, but a gradual up move which you can expect. But there will be an up move if the volatility goes down, or there will be a range bound move. So basically, less volatility means the market will not trade on either side, or rather it will stay on particular spot price at which it is trading now, or hover around some odd 20-50 points. So if you are understanding in that way only, you can definitely expect a stable kind of market on a going forward. So that is also neutral for us. Now out of 5, there are 2 neutral sign that we are getting, and 3 bullish sign we are getting. So now what you need to do is you need to just wait. Let the market trade on a higher side, and if you have already if you are not long already, you can also go long if the market sustain around let me see, 10,280 kind of level, because 10,280 has been a good resistance for the market. So as you can see here, 10,270, sorry. So as you can see, 10,000 from 10,270 market did go down. So here you can see market got down. Here you can see market going down. Here you can see the market did try to come up, broke on a higher side, and then take a support and goes high. So 10,270 is very strong resistance for the market. So if you want to trade carefully, let the market trade above 10,270, and then you can expect some sort of slightly 10-20 point stop loss below 10,270, and then expect the target till, let me see, yeah, you can expect a target till 10,340 kind of target you should expect, because that's where the moving average gets converged. So that was analysis for the Nifty. Now let us come back to the option data. So what I can see, there is continuously on the second day we can see a good sort of call short covering that has happened on all that strike price, like 10,000 to 10,650, and 10,700 strike price again saw a good bullish position getting formed. Not that good, but good position, because considering the early position that got formed in this kind of market, we can definitely expect the smart money is playing around that level. So 10,700 got a good position getting formed. Now on the put side, what I can see is now put long is getting covered on a higher side, like 10,300 to 10,700. I can see a put long is getting covered, so that is again bullish with the stable to bullish kind of move you can expect. And on a lower side, like 10,250 to 10,000 level, you can see a put good sort of put trading. So in my previous video I also did mention that the market participants are expecting a market to trade about 10,200, and now the level has shifted on a higher side, and 10,250 is the level where we can see a put trading getting happening now. So what you need to do, you need to check the option chart data on Monday, and if you see 10,300 getting some sort of put writing, when definitely expect that the market will trade about 10,300. If it was not, if it is not trading right now, it should, because the kind of position that is getting formed, it is suggesting like that. So that was my overall analysis for the Nifty. Let me conclude. I am expecting a good up move if the market trades above 10,270, which is, and which has been a very strong resistance for the market in the past. And what I feel is, since there is a bullish crossover, market should hold on the high level, and on a lower side there are the support of a moving average. However, if the market gets lower, 8 days exponential moving average will act as a support, and if you see any sort of bounce back there, you can definitely buy with the target of days high. So that was my analysis for the Nifty. Now let us quickly see what the Bank Nifty is suggesting. So in my previous video I showed you the rollover position. So rollover position was getting suggesting a bullish kind of move in the market. So now let us see what the today's position, the second day position, is suggesting. So if we see a bullish position today, that will be 2 days of bullish position getting formed. So now what I can see, the option activity range first, 24,000 to 25,500. Now on a call side, I can see the call short is getting covered very nicely. More than 50% change in open interest has been registered. So 24,700 to 25,200 are the level where I can see a good sort of call covering has happened, and 25,300 and above will till 26,100 I can see a fresh bullish position getting formed, and the position is also getting high as we move higher from the spot prices. So which is suggesting that the market participants are definitely expecting a good sort of volatility on a higher side only. So that was the analysis of call data. Now let us see what the put data is suggesting. So on the put side, broadly put rating has happened from 24,700 to 25,500, and the spot price, like let me tell you, the 25,300 has seen the maximum percentage change in open interest, which is suggesting a sentimental move. And on a lower strike price like 25,300 to 25,000 or 24,700, I can see a good sort of put writing, like 52%, 64%, 194%. So which is broadly suggesting that the market participants are expecting that the level that market is trading right now should hold. So 25,300 at are the level at which market is trading right now, and on a high strike price also I can see a put writing as happened. So which is again suggesting that the market participants are expecting market to at least trade above the strike prices where they have done the put writing. So since there are not aggressive position that is getting formed on a higher side, but still the change in open interest is high, we can definitely expect the market to trade above 25,400 as far as the option chart data is concerned. Now we'll analyze what the candlestick and moving average are suggesting. So as you can see, market did receive a good opening. There is no coming back for the market, there is a no tail, so there was a good sort of support for the market on a level. It never came back. Finally it got up, but now you can see that the market was not able to clear the exponential moving average, and now it did try, however, but received a rejection on a high level, and now it is trading below this particular moving averages. Now there is a bullish crossover getting about to get formed, but it has not yet formed. There is, as you can see on the lower side, there is a bullish crossover. It is not a range break sort of bullish crossover, but it is a good bullish crossover, so we can definitely expect some sort of validity there. RSI, as always, or as seen in the Nifty, has not broken its exponential averages. CCI here is also has also not broken its exponential averages. Volatility is increasing and it can increase further. So all in all, Nifty is suggesting a good sort of up move to continue. However, there is RSI confirmation which is yet to come. On a Bank Nifty side, RSI and CCI both are not showing the confirmation of the up move, so we need to wait. So if you want to trade this kind of market, what you can do is, if the market trades above, let me check the immediate resistance. A strong resistance 25,430 is the good sort of resistance for the market. And so if a Bank Nifty particularly trades above 25,430, you can go long with the stop loss of 30-40 points on a lower side, and then expect a target. The first target, what I feel, should be let me see. So here we can get the most of the candles. So 25,600 is the target that you can expect on a lower side. The candles are not getting formed, but still 25,540 kind of target you can expect on a higher side, because at this particular level we are seeing some sort of strong resistance getting formed. So that's the only reason these are the targets that we are expecting, or the resistance points that we are expecting. So that's it for the today's video. If you want to learn the system which I use to consider a particular trade in the market, you can check the description for the links that I have been captured systematically. And if you want, you can definitely try, but let me tell you, I'm not a SEBI registered analysis. Don't just go by my words. Try, have a look, back test it to your satisfaction, and if you find something convincing, you can definitely trade, but with your own risk. So that's it for the today's video, guys. If you want me to make more such video, please help me by subscribing to my channel, share it to your friends and family, and if you have any doubt, you can always mention it in the comment section of the video. Thank you.